The fraud audit you should do before year end, your red flags checklist. Hey everyone, Bev here from Bookkeeping Coach. Before you close out this year, I need to talk to you about something I'm seeing more and more in my client work. And honestly, it keeps me up at night. Fraud in small business books is exploding, and most business owners have no idea it's happening until it's too late. I've been doing this for 30 years, and I wish I didn't have to make videos like this. But the reality is, you need to do a fraud audit before year end. Whether you're a business owner or a new bookkeeper working with clients, the next 10 minutes could literally save you thousands of dollars. So why do this before December 31st? 3 reasons. First, if you find fraud now, you can potentially recover some funds before the year closes and before your tax return is filed with fraudulent deductions. Second, year end is when embezzlers get nervous. They know audits happen. They know CPAs are looking at the books. So they're either going to cover their tracks or make one last grab, and both leave evidence. Third, and this is for my bookkeepers, if you're taking on a new client in January, doing this fraud audit during your onboarding is going to make you look like an absolute rockstar professional. Before we dive into the checklist, I need you to shift your mindset. I know you trust your employees. I know your bookkeeper has been with you for years. I know your office manager is like family. And that's exactly why fraud happens. In my 30 years, every single time I've uncovered fraud, and I mean every single time, the business owner said, them, it couldn't be them. Trust is beautiful in relationships, but in bookkeeping, we verify everything. That's not being paranoid. That's being professional. All right, let's get into the red flags. Number 1, rounded numbers. Pull up your expense report in QuickBooks and scan for transactions that are perfectly round. $500, $1,000, $250. Now, legitimate expenses can be round numbers, right? Sure. But clusters of them? That's a problem. Here's what I do. In QuickBooks Online, go to Reports, search for Transaction List by Vendor, filter for the last 12 months, export it to Excel, and then sort it by amount and look for patterns. I had a client last year, office supplies from the same vendor, 5 transactions, all exactly $475. When we dug deeper, those invoices were fabricated. The bookkeeper was writing checks to a fake vendor, which was actually just her own account. So the legitimate explanation for rounded numbers, retainers, recurring subscriptions, loan payments, they make sense. But office supplies, repairs, consulting fees, those should be messy numbers with cents attached. Red flag number 2, duplicate or similar vendor names. This one's so sneaky. Go to your vendor list in QuickBooks. Look for variations in spelling, ABC Supplies and ABC Supply, Johnson Consulting and Johnson Consultant, Mike's Repair and Mike's Repairs. Why does this happen? Because embezzlers create fake vendors that sound legitimate. They'll use a name close to a real vendor you work with, betting you won't notice. Here's your action step. Export your vendor list to Excel. Use the Remove Duplicates feature, but first, sort and alphabetically, and then manually scan it. Look for different spellings of the same name, vendors with no phone number or address, vendors with a P.O. box. Now, that's not always fraud, but it's worth looking at. Multiple vendors with the same address. For my new bookkeepers, when you're setting up new vendors in QuickBooks, always check if a similar name exists first. Make this a non-negotiable habit. Red flag number 3, after hours or weekend transactions. This one requires you to look at your audit log in QuickBooks Online. Go to Settings, which is the gear icon, then Audit Log. Filter by date range, let's say the last 90 days. Now, you're looking for checks created at 11 p.m. on a Saturday, bills entered at 6 a.m. on a Sunday. deleted transactions at odd hours. Why does this matter? Because fraudsters do their dirty work when they think no one's watching. I caught an embezzler who was logging in at 2 a.m. to create vendor bills, immediately pay them, then delete the bill, but leave the check. Brilliant, right? Except the audit log never lies. Your legitimate explanation might be you're a night owl. You work weekends. Totally fine. But if your bookkeeper who works Monday through Friday 9 to 5 is suddenly in your QuickBooks at midnight, might be a red flag. Red flag number 4, missing check numbers or excessive voided transactions. In QuickBooks, run the missing checks report. Go to Reports, search Missing Checks, select your checking account and the date range. Gaps in check numbers can mean voided checks that were actually cashed, manual checks written outside of the system, checks deleted from QuickBooks. Now run the voided deleted transactions report. This is gold. You're looking for patterns. One voided check, probably legitimate. Maybe you made a mistake. 10 voided checks in 3 months, all to the same vendor. Houston, we have a problem. Here's a real example. I had a client with 15 voided checks over 6 months. Every single one was originally made out to cash. When I asked the bookkeeper about it, she said, oh, petty cash reimbursements. But there was no petty cash log, no receipts, and the amounts didn't match any documented expenses. Turns out, she was writing checks to cash, voiding them in QuickBooks, but actually cashing them at the bank. The bank didn't care that QuickBooks said void. They cared that the check was signed. Red flag number 5, vendor refunds or credits without matching original purchases. This is advanced level fraud, but I'm seeing it more often. Run your transaction list by vendor report again, but this time look for credits or refunds. For each refund, ask yourself, where's the original purchase? If you see a $1,200 refund from Office Depot, but no corresponding $1,200 or larger purchase in the prior months, that's suspicious. The scam works like this. The fraudster creates a fake refund, deposits the refund check into the business account, then immediately transfers it to their personal account or writes themselves a reimbursement check. To catch this, every refund should have a paper trail: invoice, return authorization, credit memo. No documentation, major red flag. Okay, so here's your action plan before year end. First, block out 2 hours on your calendar this week. Run these 5 reports in QuickBooks. Download my free fraud audit checklist. The link is in the description below. And document anything suspicious: screenshots, printed reports, and notes. If you find something, do not confront the suspect. Talk to a lawyer first. For my business owners, consider having a third party do this audit: your CPA, another bookkeeper, or hire me for a diagnostic review. Fresh eyes catch what you miss. For my new bookkeepers, add this fraud audit to your client onboarding process. Charge for it. You're providing massive value. Remember, fraud doesn't mean you're a bad business owner or a bad bookkeeper. It means you're human and someone took advantage. But now you know what to look for. Hit that subscribe button, grab the checklist below, and I'll see you in the next video. Stay vigilant out there.